Welcome guys, and today I'm going to discuss option selling weekly income. Okay, this technique basically I call it as income because this is not a profit or loss. I'm going to give you some fixed income techniques, right? So that is why I particularly use a word as income. Okay, so let us move on to our strategy. First of all, when you talk about an income, what you have to remember is you have to think opposite of what others are thinking in the stock market. Then only you can generate an income kind of strategies. All right. So what others are thinking? Generally, people sell an ATM call option. All right. People sell an ATM call option and they buy out of the money call and put to hedge their position. That is what people do. What they do is, suppose market currently trading, Banknifty currently trading at 38,400. What people do, they sell here and they buy one call above and they buy one put below. That is what they do. Now you have to do exactly opposite. You have to buy this ATM and you have to sell this call and put. All right. How to do that and what is my profit in that and why I applied this strategy? Let us look at that. So idea behind this is when you buy ATM call and put, add the money call and put. Say for example, Bank Nifty is trading currently at 38,400. All right. So if I'm buying a call and put over here, I will go first of all to check the values. 38,400, which is nothing but 415 is my call and 376 is my put. So you are going to give approximately 790 rupees in this transaction. Now what you have to do is you have to sell a put option below this and you have to sell a call option above this. All right. Now to choose a value of call and put, you have to look at open interest. All right. So you have to sell OTM call and put with an open interest. Now what is the open interest? Open interest is nothing but a transaction. When one buyer and one seller do a transaction in the market, that is called one open interest. Right? Not a volume. Volume means the people are standing only to do the transaction, but actual transaction has not happened. That is creating a volume. That is why you can see volume is very high. But these are the actual transaction which has happened. And now I will tell you one secret behind this. When you see this value 41,060, that means the big players are selling at this strike price. Remember one thing guys, FII, DIIs and big player do not buy option. They are selling here. All right. Similarly, if you check this value 58,906, that means they are selling at his call options. All right. So what you can infer from this, the market is going to remain in this range. Currently it is trading at this point, but this is going to remain in this range. So as per our strategy, I am going to buy this and I am going to sell these two. Put I am selling at 38,000 and call I am selling at 39,000. So let us quickly go to just analyze Opstra chart. Remember guys, I'm not saying that you have to follow Opstra blindly. Alright, Opstra is just an analytical tool. You have to check your strategy, take the help of Opstra, do your paper trade and check your profits regularly. Then only you can analyze your own strategy. Alright, so let me quickly reset this, and what we're gonna do is we are going to buy 38,400 call, one lot which is trading at 415 and one put of same strike price of same expiry. This is the weekly expiry guys. Alright, now what I am going to do is I am going to add 38,000 put option and 39,000 call option of same weekly expiry. So here is 39,000 call option. I am going to sell this at 160 and 38,000 put option which is trading at 232. Alright, so I'm going to sell one lot. If I come to my charts now, this is not similar, right? If market goes up, I will be in profit, but if market goes down, I will have zero. Here I will have zero. Alright, now if I check the profile, probability of which is 71%, but the interesting thing here is see the range. Currently I am at 38,400 guys. Alright, so what do you think? Market will not go just 300 point up and just 400 point up, right? So this is 400 point up, 400 point down. Will not go, it will go, definitely it will go, right? So this is the main crux behind this strategy. Banknifty being a volatile is definitely move further and will take a benefit out of it. Alright, to make it more similar, that means to make this chart like this, if market fall further, I should have some profit. I will just modify my strategy, and what I will do is I am currently buying at 38,400. I will just go 400 point up and 400 point down. Alright, so I will go at 38,800. Alright, this call I am selling, and 38,000 put I am selling. Alright, so look at the chart. Now it is balanced. Now here you can observe my profit is only 16,189. Alright, but check my investment. It is only 38,000. Alright, so if I am earning on my 38,000 1600 rupees, right, that is around 4% of my capital. That is well and good. And main crux of this strategy is this range of break even. Currently I am at 38,000. Again I am saying, so definitely I am going to go beyond this. 332 points above, or say 330 points below, market will definitely move on. Now many of you guys are thinking about this loss. Guys, this loss you will get only when market remain within this range. Alright, to get rid of this loss, what you can do is when market just goes beyond this my range, you book your profit and come out of the market. Simple, right? Don't wait to get till this profit. If you are so much skeptical, you can come out market once these levels are breached. You may get lesser profit than this, but you definitely come out of profit with some at least 1 or 2% of your investment, and that is a good amount of money. Still, that is a good amount of money, I would say. All right. Now, again, I would suggest don't rely only on the strategy. Apply your techniques. All right. This is a bank nifty, and this is my trend line. This is another trend line, and this is with the trend line and previous day Fibonacci apply. I have applied previous day Fibonacci. Again, I am drawing this previous day high and low. So if you apply Fibonacci over this, you can get probable range for the next day. Here apply Fibonacci from high to low, you can get the probable range for the next day. All right. So from this, applying your strategy as well as technical analysis, you can build a good amount of profit. Rather, I would say it's income for you. First of all, you have to do a paper trade. Don't rely on this chart as well as the technique. Do your paper trade, make yourself confident, and then only put your hard-earned money. All right. So thanks a lot for watching this video. Thank you very much.